More and more people are looking into leasing their next car rather than buying. But which is the better way to go? The experts say that depends on what you want.
For a customer that's interested in a hassle-free, easy experience, both in purchasing the car or obtaining the car initially, and then in turning over that car after a couple of years to get into the next vehicle, leasing is great for that person.
If you want to have ownership, and one of the things people are really strong about, some people, is they want ownership of the asset, the automobile, and when the loan is over they want the title, then financing is the direction you want to go.
Buying a car is pretty straightforward. You put down 20 to 25% of the loan and pay for the rest on a monthly basis, usually over a 5-year period. After you pay off the loan, the car is yours, free and clear. You're better off buying if you put a lot of miles on your car or if you want to avoid a monthly payment once the car is paid off. But many people want to get into a new car every 2 to 3 years. That's where leasing becomes attractive because you only pay for that part of the car that you use. For example, on a $20,000 car on a 3-year lease, you're only going to pay for about $12,000. At the end of the lease, you can turn the car back in and lease another, or you can buy the car that you were leasing. The experts say there are a number of signs that make you a candidate to lease a car. If you want to get into a new car more often, don't drive that many miles a year, or don't want to have to deal with having to sell the car, leasing is for you. But there are some things that you'd better be aware of before you lease. Read the contract carefully. For example, you'll be expected to pay for any damage the car incurred during the life of the lease. And you better know up front what you will be expected to pay for.
What is excess wear and tear? When does a ding become a dent? You know, you could get a bunch of people in a room and nobody would agree on it. You need to really understand who the leasing company, what the leasing company claims to be excess wear and tear.
The experts say they use several simple ways to measure excess wear and tear, whether they're measuring a scratch in the fender or a chip in the windshield.
You take a credit card, you put a credit card over any of the damage on the vehicle. If the credit card covers that, it's a non-chargeable item.
If the chip is smaller than a U.S. quarter, it's $50. If there are 3 or more chips, you have to replace the windshield.
Another area you should be aware of when leasing is how many miles you put on a car.
You need to really sit down and think about, what am I going to use this automobile for? Is 10,000 miles a year a realistic number? Is 12,000 miles a year realistic? Because if you misjudge that, that could be a severe penalty at the end of the lease. So you need to look into that area.
You can usually buy up to 20,000 extra miles a year at only 8 to 10 cents a mile versus 15 cents a mile if you go over the limit. These experts also recommend that you buy what they call gap insurance that will cover your lease payment in case you total the car in an accident. For just a few dollars more a month, you can buy a lot of peace of mind.
If you should have, unfortunately, an accident in your lease, in your vehicle that you're leasing, the value of the vehicle will probably be less than what the payoff amount is at any time during your lease. The insurance company is going to settle for the value of the vehicle, not for the value of the lease. You could be asked to pay over several $1,000s out of pocket. You want to make sure that the lease agreement you have does encompass gap insurance.
Leasing can be attractive for quite a number of people. Just keep in mind that this is not a gift to consumers. It's just a different way to finance what you want.